top three things in my notebook this morning. Number one, the VIX. Number two, Europe. And number three, the 10-year bond yield. Just to get into it on the VIX, this is the chart of the day. It is the Hedgeye playbook. We are above the trend line in the VIX, which is a problem. Now we're talking about front month volatility. The term structure of the curve is an entirely different discussion. But again, as we look forward at this, provided that we're at least on the front month above 1491, then this bear is definitely going to have something to eat. So again, keep this line in mind. Yesterday, yes, we held the S&P 500 trend line of 1779, but we could not break the back of this newfound volatility, which is incidentally and obviously in the marketplace. So watch these lines very closely, please. Second, Europe. Europe looks a lot better than any other part of the world, so give yourself a little back slap if you're long anything against everything else short, really, whether it's U.S. equities, whether it's Japanese equities, whether it's Asian equities, whether it's Latin American equities. I mean, look, Europe bounces this morning, and by and large, the largest gainers for the year to date, never mind, the only markets that are actually up for the year to date are pretty much European. So Portugal, Denmark, Austria, all these markets, I'm sure you're not long them, but the reality is that if you were long them in size, you'd be having a fantastic year. So again, European growth at a different stage of the cycle than U.S. growth. That remains our growth divergence call, which is, of course, a top three Hedgeye global macro theme. Now, finally, on the 10-year bond yield, we're right at the game time line here. And again, that's 10-year yields versus gold. So again, this is how we're risk managing gold. On the pullback, we're interested in buying gold, but only if the 10-year bond yield holds our resistance line of 2.80%. If you get above 2.80% and you race towards 287, obviously you'd sit there and not buy gold. You could buy gold lower on that. So again, we're looking at the 10-year versus gold. Very important ranges here that we're looking at, and a step up of higher lows in gold in the face of lower highs in the 10-year bond yield makes it a very interesting game to play at that. So those are your top three things.